Hello everyone, this is Nick Perry, and the topic of today's chart slideshow is a technical formation called the rounding top. Before I get into the presentation today, I want to reiterate a point I've made in the past, and that is I am not a pure technician. I am not a chartist who relies solely on charts, and I want to make that distinction because there are those who do and may have a stricter guideline as to what they're looking for. Given that I only look at charts as part of the picture, my reliance on them isn't dedicated strictly to the technicals. So depending on your viewpoint, that's a good or a bad thing. To the purists out there, I'm going to be sloppy or not heeding all of the indicators. But that's just the way it is. I'm not saying that's any better or any worse. But in trading, you've got to find something that meshes with your personality. And for me, looking at charts is important, but I don't rely on them in and of themselves. As far as the topic of today's discussion, the rounding top, this is something you have probably seen me discuss before in the blog. It's a pattern that I look at and reference. I recently talked about Red Hat and mentioned it there and spurred a couple of questions. So I thought that this would be a good medium for trying to establish what I mean by the rounding top and what I'm looking at. Before I get into the rounding top, it's important to sort of talk about how charts behave, how stocks behave. And I want to start with talking about V-bottoms. And you may have heard this term before. Right here I sketch out two of the typical patterns. You've got the typical V and the sort of W or the back-to-back V, double bottom, whatever you want to call it. Basically the idea is that selling tends to be sharp and tends to be in a hurry. And if you've ever been wrapped up in an experience where you're holding a stock and all of a sudden you just decide you have to get out, you look at it and you just say, I need to get out right now, and inevitably that ends up being the bottom. At least if you're me, that's happened to me on more than one occasion. That's what you're talking about. It's sort of a rush, panicked selling that runs its course quickly, and then you see a bounce back. Tops, however, tend to form in a different way. They tend to be more of this rounding, and that's really all I'm talking about. It's just a sign you see a push higher, and then the upward momentum seems to stall, and then you sort of see this sort of peak, and then future rally attempts keep failing at lower and lower levels. And basically, it's nothing more than you can sort of draw an arc over the price action to sort of see how the momentum is slowing. So kind of putting the theory aside, let's look at an actual chart. This weekly chart of analog devices is a good representation of what I'm looking for when I talk about a rounding top. Basically, you've got this uptrend that's in place through here. You see the peak and then the sort of round. And then this support zone right here is a very important part of the whole rounding top pattern that I'm looking for. Basically, the rounding top is just a sign that momentum is slowing. That can either lead to a consolidation or a breakdown, and that can be very difficult to figure out which one is which. So that's what I'm looking for when I'm identifying these support zones. This area here had been minor resistance here, proved support here, offered support here, and you break it here, and that's a clear sign that the rounding top is completing. First of all, you got the breakdown of the uptrend right around this area, and then the break of support here. And as you can see, after analog devices broke that former support, came back up, didn't quite get there, and the stock has sort of just languished and eventually broke down further. So basically, what I'm looking for in the rounding top is a sign that momentum is ending. Now, of course, anyone can show you a chart and say, oh, well, in hindsight, this is what you should have done. So I want to talk about a real life example. This was a chart that I featured in the blog back in June. Hewlett-Packard, we had the uptrend here. You've got this identified support zone, and you see the rounding top here. Now, as I mentioned, this rounding pattern can be sometimes considered a consolidation. So let's this is how I left the chart in the blog. Let's now look at how this played out. In the previous screenshot we just saw, Hewlett-Packard was down testing the zone. The next week, it held its support and bounced and actually rallied. And when we look at what happened after that, you see the rally, the pullback that tests the support zone again, and then you see the bounce higher. I wanted to use this as an example of what can happen when it doesn't play out as expected. Basically, you see the sort of rounding top here. You see the momentum slowing, but the stock doesn't break down, and that's an important point because these consolidations can bounce along support for a long time. I should also note that I typically look for these more on a weekly basis. So we're talking about this playing out over months. So it's an intermediate term pattern that I look for, and it's clearly not one that's perfect, which is why I wanted to sort of illustrate this Hewlett Packard example, because it shows, I was leaning towards it breaking down, the momentum was ending, the momentum did end, but it didn't break down. So that's an important point to watch, that it's not only the slowing momentum, but you want to see signs that it's not just a consolidation. So that's sort of in a nutshell what I'm looking for in a rounding top. Clearly there's room for disagreement on this, and others may have different views. If so, I'd be interested to see some message board posts for people discussing what they're looking for, or even if they just completely disagree with me. I think it's good to sort of communicate these things, especially when you're reading the blog and I'm talking about these things. The more understanding you have of them, the better you're going to be able to use that information or decide what information you want to bypass. So that wraps up today's chart slideshow. Don't hesitate to send me any questions.